A lot of concerns coming through from China, issues coming through from the US, of course, Ben Bernanke's confirmation, US President Barack Obama talking about downsizing on banks' risk-taking ability. All of this creating quite a lot of pressure for markets right now.
Yeah, sure. Let's try and unpack those as quickly as we can with as much sense as we can. I think the Chinese thing I viewed quite differently because the authorities have been taking steps over perhaps the last 4 to 6 weeks, and we were leading up to perhaps a rate hike sometime post-April or so. I think, interestingly, what they're looking ahead is at inflation. So why would a central bank tighten? Would tighten because there's runaway inflation, or because they're comfortable?
Inflation is at 1.9% in December from 0.6% in November, so we have seen an uptick there. Yeah,
but you also saw that in the UK. You saw expectations comfortably beat on the bad side for inflation. I think what you're probably seeing here is the central authorities recognizing that they've been able to do their very best. And let's face it, urban fixed price assets increased over 30% last year. So it's a massive increase. And there's a lot of liquidity. And the part that always irritates me about the Chinese as a consumer is that over the last 10 years, as they've become richer, they haven't spent more, they've actually saved more. So there needs to be a subtle click over, I think, in their world as consumers in order to really be able to take that economy to the next level. But they're just a whisper away from being the second placed economy in the world. So I think their central bank authorities are doing this in a smart way.
Do you think this is going to dampen the demand for key commodities?
No, I don't think so. I think maybe in the short term people will be worried about it. But I had a look at Billiton's production report last week, and it indicates to me that their key trading partner, which is China, they're ramping up iron ore significantly. They're ramping up their petroleum division significantly. Now, their petroleum division is not necessarily in close proximity to China, but their iron ore obviously is. They're seeing increased demand in the years to come, and I'm talking 5 years, 10 years. So they see their key trading partner as still a huge consumer and consuming more than we have now. So notwithstanding the large run-up in commodity prices, I know people love to take it 12 months over 12 months, but if you look at a copper graph over 5 years, it's actually comfortably below its highs where it was for a period of 24 to 30 months.
Ben Bernanke, the confirmation there, and this also causing a little bit of concern in the US. Do you think he'll keep his top spot as Fed chairman?
I think it's become more of a political hot potato now than ever before, and simply because the Republicans, although it was only one seat, they've obviously broken something that hasn't happened in 70 years of American politics, a big majority like that, 60 to 40 seats in Congress. But from what I could read, it only seemed that 30 congressmen would oppose it, so that means 70 would approve it.
US President Barack Obama talking about cutting back on the bank's risk-taking ability, also trying to prevent them from trading with their own money and also owning hedge funds. Is this a negative? Is this a positive?
Well, the first things first, is it their own money or is it the money of the depositors? And I think that's the subtle question here that we have to ask, because I think everyone's first comment, everyone in my world who would sit there, was completely enraged. But if you think about it a little bit closer, I think it's almost a throwback to the Clinton era and a reversal of what happened there, where I think they allowed banks the ability to be able to do this, or engineered the playing field for them, the ability to be able to trade using clients' money. I don't necessarily think it's a good idea, and think that perhaps you should separate the two, and the notion of too big to fail shouldn't actually exist, because at the moment it does. If there was a problem, let's face it, at JP Morgan or even Bank of America or Citi, Bank of America and Citi are two good examples. There has been that backstop. So they want to be able to separate the retail business, and perhaps what they're looking to do is a smart thing, downsize. And I always say, if those bankers there are irritated by the laws that have been created, then they must go out and raise their own money, and if they're good enough, trade their own book. Because if they're masters of the universe, then maybe they can do it for themselves.
The stocks in the US logged their worst performance since March last year, and that's when we initially saw the rally occurring after those March lows, as we tend to call them. Where do you see markets going from here? And also just looking at it in the South African context, we obviously take cue from the US and from Europe and Asia as well. We've got the MPC meeting this week. Do you think we'll be moving more towards the local data, or still just really being pushed by the international equity markets?
Yeah, the worst thing about this time of the year is we only got half an hour of US trade, and let's face it, we're still dominated by what happens in that market. Interestingly, the few companies that have reported, the big bellwethers, have actually they've actually beaten on the top line, which what everyone was looking for. And there've been quite a few comfortable beats. You know, GE beat on Friday, McDonald's beat on Friday. And those two stocks stood out. That's kind of barometers for the economy. You know, people eating down in the case of McDonald's, and then GE gives you more of a slightly global picture on where people are thinking that infrastructure and energy demand is going to come from. And I don't know, I mean, I've said time and time again that I think, you know, GE have moved towards the right path in terms of the way that they're structuring their own business and being focused towards big infrastructure projects and big energy projects. And I think that ties back into what we started at the beginning of this conversation, China and their desire for commodities and the producers ramping up production. So I would view this more as a buying opportunity, and you might see more of the same for a few days, and I would say inside of that there's probably an opportunity.